And what is up everyone, Andrew here, and in today's video we're going to be going over the top 3 tips that I have on how to be a better stock trader and investor. Alright, so first tip is to invest in what you know. So this is a rule that Warren Buffett abides by, and so should we. This could be sector-wide or even talking about a specific company. But the trick is to only invest in what you know. Don't be putting in your money in something that you have no idea how it works just because you like the technical setup necessarily, unless you're a pure technical trader, or like especially if you're holding something long term, just don't do something that you don't know. So for example, like me, I am very much into tech, so I know a lot of the tech companies, I know what they make, I know what's popular, I know how they operate and how they're perceived by the public. So this allows me to invest in the tech sector with more information than somebody else who might not know that much about tech. And yes, tech is like the popular and hot sector right now, and it has been for a couple years. And I do think that tech is going to drive the market forward because it is what consumers want more of, so to speak. A lot of tech, they're geared towards mass selling of whatever they're making, such as phones or video game consoles. If tech isn't your sector, though, that's totally okay. There's so many sectors out there that are, if you know something about it, it will help you become a better investor in those companies. So either the healthcare sector or the restaurant sector, those could be sectors that you could look into as well. And if you don't want, you don't even have to look at sectors. If you know a lot about specific companies, and just that company, you follow that company very closely, so you know a lot about them, you are very updated on the news, that can help you a lot when you're trying to trade that company's stock. And as a result of just knowing the sector or a specific company, you're just more informed about whether or not that company or that sector is worth investing in. Alright, and my second tip is don't FOMO in. If you don't know what FOMO stands for, it stands for fear of missing out. But the saying that what goes up must come down isn't just talking about gravity, it's talking about stocks as well. If you see something shoot up super fast, yes, it can keep on going higher. However, at a certain point, once a stock or any asset has gone up a certain amount, the amount of upside is now limited and the amount of downside is now exponentially increased. As the higher it is, the more downside there is to it as well. And one thing that I like to think that helps me against fear of missing out, like if I've been following a stock very closely and I've been wanting it to go just a little lower from my entry point, but then all of a sudden it goes up 5% and now just it seems unstoppable, just take a quick step back and don't trade with emotion. That is the biggest thing about FOMO. It is activating your emotions, and when you trade with emotion, it is often not as good. So the thing that helps me with FOMO though is just to remember that there are tons and tons of really good opportunities to put your money in every single second. So just because I don't catch this train, there are a ton of opportunities that I could be missing out on and that I could be hopping onto instead of this train that has already half departed. This is one of the reasons why I like contrarian trading. You buy when everything is getting slammed. You buy when this one stock has been down 15% and it doesn't really have a fundamental reason why, and perhaps its earnings are 2-3 weeks off. You buy in those times. You don't buy when a stock is already 20% up in the last month, because most of the time, after a quick run up, after it runs up, there is consolidation, there is retesting of supports, and it comes down. Even though it might not seem like it in that moment, even though something might seem unstoppable, you ever buy a stock and then as soon as you buy it, it starts tanking? Yeah, just don't FOMO in. And on to my last tip, it is patience and profit taking. So the thing about the stock market is that people say you can make 8% a year on average, but this sort of guaranteed gain of the stock market only applies if you hold for an extremely long time. We're talking 25 or more years, because anything can happen in the short term that you can get extremely unlucky with timing, who knows. This is why patience is really important. Expecting to double your money every month consistently is extremely hard to do, and this is going to lead you into some really bad trades. And tying into my last point about how everything that goes up comes down leads into my final mini point about profit taking. Always be sure to profit take. Nobody ever lost money taking profits. Yes, you do want to make as much money as you can. However, if you think about it, if your stock has gone up 10%, it might be time to take some profits, because now that it's gone up 10%, the remaining upside, unless you're very sure and unless you've read into the fundamentals and you think that there's still huge upside left, the remaining upside now is 10% or more, however much less than it went up. So what you do is you profit take from this 10% gain. You don't even have to take your whole position, maybe just a bit, and then you put it in something else. And this sort of allows for a revolving swing trading sort of method. But the thing is, if your stock goes up 10%, it will come down 6% probably, and that is to be expected. So just to recap everything, invest in what you know, don't FOMO into stocks, be patient, and be sure to take profit when you can. So these tips aren't something that you can start implementing into your stock trading perfectly. These are tips that you do have to work at, so do be patient in that respect as well. So I hope you all enjoyed this video. If this video was helpful in any way, please be sure to leave me a like and comment if you have any questions. Also, please be sure to subscribe if you haven't already for more videos just like this one. And yeah, I want to thank you all for watching if you got this far, and I will see you all in the next video.